Okay, so who can tell me what is a creditor? How would you define a creditor to your friend? So if you had to explain a creditor to someone, how would you explain it? Okay, so Bernice says it's a supplier, which is correct. Okay, Piet thinks it's your credit manager. Okay, so remember, a credit manager is someone that manages the credit of an organization. So, Piet, it's not exactly what I've asked. Yesterday we discussed what a creditor is, we discussed what a debtor is. So a supplier is correct, but I want you to explain to me, how would I know the difference between a supplier and a customer? Okay, so Tomelo says someone the business owes money. Okay, so Tomelo, you're on the correct track. So it is someone the business owes money, but why do we owe that person money? You need to add that additional information in there. So you need to be very specific as to what is the reason for owing money, because I can also owe the bank money and the bank will be seen rather as a lender than a supplier. Okay, so you need to tell me, why do we owe the business money? What would we have purchased from that business? Okay, so Tamara, that's correct. And Bernice, yes, we bought supplies or we bought services on credit, and that is what is important. So it is someone that owes, it can either be an individual or a business that owes money to our business. And the reason for that is because they bought goods or services on credit. Okay, so that's very important. In the test last year, they actually asked students to explain the difference between a supplier as well as, or a creditor and a debtor. Now let me ask you the next question. How would you explain debt to me? If I asked you, what is debt? How would you explain that? Okay, so Bernice says it's something you owe. Okay, so Bernice, you're correct. Debt can be something you owe that or that is owed to you. So it depends on which side of the debt you're sitting at. Okay, so it's normally money that is owed between two parties. So the one party owes the other party some form of remuneration, whether it's money or goods. They can decide how they're going to settle the payment for either a goods or service that was delivered. Okay, so it's basically you owe someone money for something that you have received in return. Okay, now let's look at your creditors and your creditors allowance journal. What are they for and what is in them specifically? So your creditors journal summarizes all your credit purchases. Okay, so any purchase you've made that was on credit will appear in your creditors journal. And that is based on your original credit invoice, because that's the invoice you receive from your supplier. Now, examples of that is credit purchase of trading inventory. It can be non-current assets, for example, like equipment. It can be consumables like stationery, cleaning and package materials, and then any recording of expenses incurred on credit but not yet paid. That is, you can see quite a wide variety of types of purchases that you might see in your creditors journal. Now, your creditors allowance journal on the other slide summarizes the returns to your supplier or rebates on goods or services previously recorded in your creditors journal. Now that is very similar to your debtors allowance journal. If I haven't recorded it originally in my creditors journal, I'm not allowed to account for it in the creditors allowance journal. Those returns are, for example, goods that I've purchased from a supplier that was either the incorrect goods or it was damaged, whatever the case may be, why I've returned it. A rebate might be I asked for a trading rebate or a discount based on the goods I've received, whether I bought it in bulk or because of the fact that it wasn't 100% what I've asked for. And this is based on the original credit note. Now, examples of this would be returns or rebates of damaged inventory. If our expense was previously incurred on credit, so rebates. Okay, so what does a creditor's journal look like? If you look at the structure, it's very similar to what your debtors journal look like. The only difference is your debtors control column is substituted with creditors control column. We're going to credit creditors because it's a liability. It is increased on your credit side. Because it's a liability or expense we're incurring, the VAT we have here is input VAT, whereas with debtors control it would have been output VAT. And we take it to trading inventory if we on the perpetual inventory system. If we're on the periodic inventory system, which we're going to discuss later in the semester, then that trading inventory column will change to purchases. Okay, and then we've got our sundry accounts. As you can see, we credit creditors control and we debit all the items. Something else to note is your creditors journals does not have a cost of sales column. Only your debtors journal and your debtors allowance journal has a cost of sales column, but only if we've got a perpetual inventory system. So make a note, it's only when we do perpetual inventory that we show a cost of sales column in debtors journal and debtors allowance journal. And remember, the totals of your creditors controlled will input that to your trading credits. Your trading inventory is taken to your general ledger. Okay, and like you can see, exactly the same information as with the debtors journal. The only changes is the detail shows the name of your supplier as opposed to the name of your customer. The folio number is your creditors account number, not your debtors account number, but the rest of the information is very similar. So you can see as soon as you get the hang of the structure, the type of information you have to fill in will be repetitive. It will be the same. It will only be the calculations that will differ. Now, your creditors allowance journal, on the other hand, the only change there is instead of taking it to input VAT, we take it to output VAT, and our debtors control is being debited because we decrease liabilities on our debit side, and then output VAT is credited, trading inventory is credited, and your sundry accounts are credited. So now we just reverse the transactions, and the same information that you would have included in your creditors journal is seen on your creditors allowance journal. Okay, now let's do a practical example to explain this concept, just to show you how this information is documented and how it works. Now, we're still the bookkeeper of ABC Stores, and the owner is Mrs. Smith. The business is registered for VAT. Like we said, all business charges. Okay, Bernice, I'll answer your question just now. Okay, so all the charges, the business charges 15% VAT on all its sales. All amounts are inclusive of VAT. Okay, and then they tell you they've given you specific document numbers. When they tell you that information, you use that initial abbreviation and then you start with 1, 2, 3, 4, and then you just keep on numbering. So that's why they give you that information. Okay, so Bernice, you asked, do we have to indicate what is credit and debit? No, you do not have to indicate what is credit or debit. Where you will need to know what is a credit and a debit is when they ask you to take that journal and put it in a T account. Then you need to be aware which column goes where. Okay, so last year what they did is one of the, I think it was in the exam, they actually gave them a journal, and then They had to complete the journal, and then the second part of it was, okay, taking that information from the journals you've completed now, go and complete, for example, the creditors control general ledger account. And then based on that information, you had to know which columns information pulls through to that account and on what side it would be documented. Okay, so that's where you would generally need to know it. You don't have to show it when you do the physical filling in of the information. Now let's look at the two transactions which we have. So the first one is Segway Wholesalers. We have trading inventory purchased on credit of 28,158 Rand. And then the second one is we've got trading inventory returned to the supplier of 1,710 Rand. Okay, so we've got a purchase and then we return some of it to our goods. Now let's see how we record that into our journals. Now if we look at the top, you'll see the creditors journal. We've put in the full amount of the 28,158, which was provided on the previous page, in our creditors journal, or creditors control column. Now remember that amount is inclusive of VAT. So when we work out the input VAT, we take that full amount, we multiply it with 15 over 115 to work out just the VAT component, and the trading inventory is then the difference between your creditors control and your input VAT. Okay, so it's straightforward. There's nothing funny in your creditors journal. Then your return, exactly the same. They gave you the full amount, which was inclusive of VAT, and you do the calculations exactly the same as you did with the creditors journal. But now instead of taking that VAT to input VAT, we take it to output VAT. Okay, when they ask you to document this, for example, in your accounting equation, and you have to give the account names, a lot of students get confused with the VAT columns. So my suggestion is write VAT, and then you remember that with purchases or any assets that you buy, it's always input VAT, but if I return something, it goes to output. If I sell anything, it's output, but as soon as my customer returns something, it goes to input. So, and then you just go fill in input or output in that account name. Okay. So that you can get the full mark. We do, if you just write VAT, we'll give you half of the marks because you have the correct account. You just haven't indicated specifically which VAT account. Okay. Now, general journals. Now remember, general journals is any transaction that does not fall in either your free cash journal, so that is your cash book payments, cash book receipts, petty cash journal, or your 4 credit journals, which is your creditors journal, your creditors allowance journal, your debtors journal, your debtors allowance journal. Okay. The structure of this one varies significantly from your other ones. So your other ones have nice columns which you total up, whereas your general journal shows each individual account as a line with the amount that goes to it. And then it shows a debit or a credit, so whether I'm debiting or crediting the account. Now let's have a look at what that would look like. You've got your document number, which is generally your voucher number. You've got the transaction date. Your details is your account name to be debited or credited. And if I'm going to credit an amount, I put it slightly more to the right to show it's a credit versus a debit, because you don't write in front of it whether I'm debiting or crediting the account name. You just write the account name. So this just helps you when you quickly want to scan through it and see whether it's being debited or credited, to just distinguish between a debit and a credit account. Then your account reference number, so that is your each general ledger account in our accounting records has a number. Now if it's a balance sheet, it will have a B, and then we start with number 1 up to the number of accounts we have. So that number that was assigned to that specific account will be filled in here. If it is an income statement account, we also call it a nominal account, then it would be an N, and it will have a number 1 up to the number of accounts we have. Okay, so normally that information will be given to you on the trial balance with the account, the folio numbers or the account reference numbers that you have to fill in here. Okay, so once you finish your transaction, so adding all the account names and their amounts in here, at the bottom you add a short narration, so a short description, what does this entry relate to? And then you underline that to show that the next journal is being processed. Okay, now let's see what it looks like. Let's do a basic example. On 1 March, John made the following capital contribution to XYZ Limited, a personal computer to the value of 5,000. So John gave a personal computer to the company worth 5,000 Rand. Then they tell you SARS allowed John to claim the full VAT amount on the value of the computer. And then Journal JV1 was issued, and the cash invoice he initially received in his personal capacity, as well as the SARS depreciation schedule, was used as supporting documentation. So they're just showing you what information he gave to SARS in order for the business to be able to claim the input VAT on that computer. Now let's see what the entry would look like. Okay, so you can see at the top is the description. We say it's the General Journal of XYZ Limited for the month of March. GJ1 is the journal number. Then our document number, we said it's a journal voucher. Now, because this is our first entry, it is JV1. So on the first day of the month, we take it to equipment. You can also take it to computer equipment. And the folio number that was, for example, assigned in this case to that account was B9. Then we take the 5,000. Now that 5,000 is including VAT. Now whatever you take to the asset account needs to be exclusive of VAT. So that's why we multiply with 100 over 115 to get to the amount excluding VAT. Because SARS allowed us to claim the input VAT, we then create an input VAT account for the difference, which is the 652. Okay, so you'll see those two accounts are far left. Then the capital account has been moved to the right. That is what we call an indent. That is how I know capital has been credited, and that account number is B1, and that is the full 5,000 Rand that was provided. And then at the bottom, you'll see I've given a short narration, capital contribution by John. And that is what this journal relates to. Okay, so you see that's the indent we're talking about, the folio number, which is your general ledger folio number. And then at the bottom is your short narration. Okay, so I think we're going to take a 10-minute break. Okay, let's make the break till 9 o'clock, and then we will start with question 5.3 in the next session. Do you guys have any questions before you run off and have a break? Is there anything you're wondering about?